usually when I sit down with a client,
Yeah.
before we go out to look at properties, once
Yep.
they are approved, I'll ask certain questions. Every home is gonna have issues, right?
Yeah.
You just try and find out, does this property has like major issues, or is it minor issues that I can deal with?
Will someone come in saying, I need a house in like a month?
You want to start this process of buying at least 5 months prior to.
To the time you want
Sure,
to move.
yeah.
The higher your credit score,
Correct.
that helps you to get a lower
Yeah.
interest rate. The problem.
Why are you buying? Why do you want this? Which areas do you want? Why do you want those areas?
Yes. And now you found this home that you like.
Yeah.
Your family
Yeah.
falls in love with it, and you make this offer,
Right.
but your offer is rejected.
Yeah. Ooh. Yeah.
What if I told you that buying a house is not as overwhelming as it seems? If you ever have or wondering how, to go from your dream house to holding the keys of your dream house in your hands, now you are in the right place. This is the episode for you. We are going to be breaking down the whole process of acquiring a property for yourself, from the initial concept of how to get a realtor to actually signing the documents and getting the key to your actual house. It's going to be a wonderful, wonderful episode. My name is Kevin Kamau, and welcome to today's episode. In the studio with me, I have Mr. Great himself, the realtor, the Kenyan realtor in the house, who has been doing this for over 2 decades now, I believe.
Yeah. About 12 years.
12 years.
Yeah.
There you go.
Yeah.
So the experience is there. Mr. Samson Kemani himself. I call him Sam. And welcome to the show.
Thank you, Kevin.
You are most welcome. I would like you to just take a look at that camera,
Yeah.
introduce yourself for just a few seconds, and say hi to the viewers.
Sure. So my name is Samson Kimani. I'm a real estate agent. I've been a real estate agent for now about 12 years. I'm with the Remax Real Estate Center. I'm out of Taunton, Boston, Massachusetts, but I'm licensed in Massachusetts and Rhode Island. And man, I'm looking forward for this day, for this conversation.
Amazing.
Let's get it.
I am glad to have you, Sam. Thank you so much for showing up. Thank you for honoring us with your time. And for our viewers, thank you for joining us today. And we are going to dive right into the content, like at the heart of the matter. The first thing, and I'm just going to dive into it.
Yes, sir.
When
Yes, sir.
people are thinking about purchasing a property, buying a house, where do they start? Most people do not know where they are going to start. But the one question they're always asking
Yeah.
is, how much money do I need? It boils down to the money.
Yeah, it's true. So there's different ways, you can buy a property, right?
Yes.
However, I'm just gonna give you the basics, right? That's because that's what you're looking for, right?
Yes.
So I would say the first thing when you're thinking about buying a property, one of the things the banks or the mortgage company they like to look for is they want to look at your credit, they want to look at your income,
Yes.
and the debt that you have.
Yeah.
Right. So the debt that you have, the way they find about it is when they pull your credit.
Good.
Okay. So I would say, and some people, what I find is, they just want like a professional person really to advise them where to start. Right.
Where to start?
So for me, usually a lot of times, because I get these questions on a daily basis.
Yep.
Number one is I just ask them like, all right, why do you want to buy a property?
Yes.
Right? Because buying a property is an investment, right? Some people think like, all right, I'm gonna buy the property, and I'm just gonna sit on it, and it's gonna make me all this money. It's an investment,
Yes.
right? You can buy a property, you may need to upgrade a few things here and there.
Yeah.
Some other people, once they tell me what they want to buy,
Yeah.
then we go from there, and I find out like other people, buying a property is not really, their thing.
Okay.
They're better off just renting. But to really answer your question, how much money you need down,
Yes.
A clean buyer, when I say a clean buyer, is a person who has like the down payment and the closing cost,
Okay.
right?
Yeah.
So let me just put a number out there. Let's say you're buying a property for 500,000.
Yes.
It could be 300,000, it could be 400,000, but I like 500,000. You know, that sounds a little bit better, you know?
So it's a good, nice number. It sounds good
Yeah.
to say. Yeah.
Yeah, and honestly, here in Massachusetts, if you're qualified for under 500,000, if you're looking to buy a single family,
Yeah.
sometimes for most of the towns that I know, most of the cities that I know, you might not be able to get a lot. Anyways, let's go 500,000. There's different type of loans, right?
Yes.
So there's some that you need to put 3.5% down. There's some that you need to put 3% down, but let's go with 3.5% down. So that's what, like a 3.5% of 500,000. That's about let's just round it off, like 16,000.
60. So
16,500.
basically what you're saying
Yeah.
is however much the value of the house you're looking to buy is,
Yeah.
you are going to need 3%,
So
3.5% of that.
depending with the loan that you're getting. Some loans you might put 3% down, some 3.5% down, some 5%. I'm just using 3.5%, just like the middle
as,
bit.
as a rough number.
Yeah.
Okay.
And so
Just a quick clarification.
Sure.
So it's not the value of the house; it's the loan that you are going to get.
correct.
Okay.
So let's say you are pre-approved. You went to the mortgage person. They pulled your credit. They look at your income.
Yes.
They see the debt that you have, and they say, "We, as the bank, we pre-approve you for 500,000."
Yes.
So that's the number that I'm going with, 500,000.
Yeah.
Now the property that you buy could be 450. It could be 460.
Yes.
But we're just using the amount that you're pre-approved for.
Okay.
Got that?
Yes.
Okay. So the down payment for that, for 3.5% down, will be, like I said, just round it off to 16,000.
Yeah.
Right? 16,000. That's 3.5%. And then you have what we call the closing cost.
Mm-hmm.
The down payment is pretty much you're telling the bank wants to give you a loan,
Yeah.
and you say you got some money
Yeah.
saved, to put as a down payment. The closing cost is the fee that you pay for doing business, right? The bank is will do your mortgage and stuff like that, the
Yeah.
paperwork and all that kind of stuff. Part of the closing cost, that's part of the closing cost for the bank to do the paperwork.
Yeah.
But also you need like an attorney, you need like an appraisals. You need to have what we call taxes, like the taxes, the property that you're gonna buy. Most of the towns, they usually like to
Get the
hold
tax
in,
up
yeah,
front.
yeah, like 3 months in advance.
Okay.
So that's part of the
the
closing.
closing cost basically is money to pay the people helping you acquire the property plus taxes for the city.
Yes. Well, the closing cost is mostly, think about like the bank is doing this paperwork for you,
Yes.
right? So there's fees and everything they include as part of their closing cost. So the bank is saying, all right, you're gonna give us your paperwork, we will process your mortgage, and then if you get approved, then of course they give you the mortgage. So that's part of the closing cost.
It's part of
Part of closing cost also is you need to you have an attorney
Yes.
who the property that you're buying, we want to make sure it has a clean title.
good.
That way you're not buying a property that once you move in, somebody's gonna come knock on your door and say, I still
You're
own
in
this
my
property.
place. Yeah.
Yeah.
And before we even get there,
Yeah.
I would like to take us back to what you said at the beginning.
Yeah.
The first thing when you are about to purchase a property,
Yeah.
before you even think about the money, the question is,
Yeah.
why am I buying the property that I'm about to buy?
Right.
Is it like my permanent home? Is it an investment property?
Yeah.
Or for whatever reason, but being able to establish that at the beginning is key.
Yeah.
So my question comes in there because now, let's say for example, I'm a first time home buyer,
buyer, yeah.
and I'm buying this property for myself and my family to just live in it.
Okay.
So obviously that's going to be a different mindset
Correct.
going into the process than if I am coming in as an investor.
Yeah.
And so let's go with the first time home buyer.
Okay.
You've established that now you have to get pre-approved, right?
Correct.
You talked about credit,
Yeah.
and most of our viewers are immigrants,
Yeah.
and some of them might not understand what is this credit thing that you're talking about.
Okay.
Do you mind just expanding on it a little bit so that they understand?
Yeah. So basically, here in the U.S., when they say credit, it means really you have to apply for a
Yeah.
credit card,
Yes.
right? You have to apply for a credit card. The reason you're applying for the credit card is because when it comes time to either buy a property or even buying a car, right? If you're gonna get it via, leasing, or so the bank wants to see what's your habits, right?
Are you able to pay the loans?
Yeah. Do you pay your bills on time?
Yeah.
That's basically why you want to get a credit card. You want to start, and you can go online. I don't have, any company that I can tell you like this is the company you should apply.
Yep.
They have American Express, they have Capital One. You just do your own research. However, you do want to have a credit card, and you want to once you apply, at least for the first 6 months,
Yeah.
then the way you pay the bills, you use it, right? And then you pay it back. You
Yes.
use it and you pay back. So that when you go to the bank to apply for a loan,
Yeah.
they can see, all right, this person, all right, they pay their bills on time.
So basically, you have a good credit history.
Trend, yeah.
Yeah, if you have a good credit history, it builds up on your credit score.
Correct.
And your credit score is what's going to be important
Yeah.
as you purchase.
One of the things.
One of the things that is going to be
Yeah.
important as you go to apply for the mortgage.
Correct.
All right. Another thing that you mentioned.
And and that for the credit, right?
Yes.
So I'm sure you have some audience
Yes.
that also, they already came here, they apply, they have credit cards. And unfortunately,
Yeah.
sometimes nobody usually give us advices on how to use it. So you find that your credit is kind of not where it's supposed to be.
Yes.
Right? So I don't fix any credit. However, sometimes people come to me, they want to buy a property. So what we usually do is I connect them with one of the lenders that I use, right?
Yep.
And so what they will do is they'll pull your credit. They'll see where you need to fix your
Yes.
credit. And then after, several months, really it depends how fast or, you want to fix your credit.
Yeah.
However, he will advise you or she will advise you how to fix your credit.
Yeah.
And then within no time, you may be, able to buy a property.
Yeah. So I guess the good thing here, the good news is, even if you have a bad credit score, it's not all lost for you. That does not mean that you cannot be able to purchase the home that you want. It simply means that there's going to be a process for you to actually fix your credit first before you get through the whole process of acquiring the property that you want for yourself. And that's actually good information, because someone might think,
Yeah.
my credit score is bad.
Yeah.
Then I'm stuck.
I have
not
no
able to
chance
buy.
of buying a
Yes.
property.
And that's
Correct.
not the case. So there is hope for you out there. Do not be afraid to consult. Do not be afraid to ask questions. And it's a good thing that we have Sam here. He has all the wealth of information for us today. The next question that I was going to ask you is the down payment.
Yeah.
And again, I'm trying to simplify the terminology here so that
Okay,
people
yeah.
understand exactly what we are talking about.
Yes, sir.
So down payment is going to be in form of some money that you've saved
Correct.
aside.
Yeah.
So even if you're about to apply for a mortgage,
Yeah.
which is basically a loan from a bank
Yeah.
or another lender,
Yeah.
you will still need to have some money of your own
So
for the down payment.
yeah. So Kevin, here we are speaking of an ideal buyer.
Yes.
Right. The buyer that will walk into a bank or speak to a mortgage person.
Yeah.
An ideal buyer is really somebody that has their down payment, the money they've saved,
Yes.
and they have their closing cost.
Yep.
That's the other, however, there's some loans, right? There's some loans that somebody might not have the down payment
Okay.
or the closing cost
Yeah.
for the first-time home buyer that they can qualify for, some grant money,
Yes.
or down payment assistance. So to your audience, really for you to have a great idea, let's say you don't have the money to buy the property, you can speak to a lender and see what type of programs they are offering. So if they have a down payment assistance and you qualify for it,
Yes.
then we've helped some people get into properties that way.
Oh, wow. So there is options out there.
There's options.
So and I think the key word here is as long as you speak up, consult with someone,
Yeah.
you will find a way.
You'll find a way. The bottom line, really, when you have your money saved,
Yes.
again, that's an ideal buyer. That's a stronger buyer.
Yeah.
Because maybe, as we go through the, your questions, this part whereby now, you're going to look for properties and you want to make an offer. Who's a
Yes.
stronger buyer? Who's not a very strong buyer?
Yeah.
The sellers look at that too when you're presenting your offer.
That is good. I'll just encourage our viewers. The keyword ideal buyer, like the person who's already prepared. Set yourself up for success by making sure that you're building on these foundational issues even before you decide, hey, it's about time for me to buy or purchase a property. Make sure that you already situate yourself to be a buyer who's going to be competitive in the market. Because, hey, we know how it goes. It's the person who has the heavy pockets who gets their way at the end of the day. So make sure that you're prepared for that. Moving on now to the next step.
Yeah.
We've already established I have my down payment.
Yeah.
My credit score is looking somehow okay.
Yeah. Ideally, I would say if your credit score, the higher it is, the better.
Yes.
If it's, if it's like 680 and above, it does give you options of the type of mortgage that you can get.
Yeah.
Are there people that have assisted? Their credit score was lower than that, 650, 620. Yeah. These, again, different loan programs. Full disclosure, I'm not a lender. I'm not a mortgage person.
Yes.
They can always tell you all the programs they have. But yeah, there's some people who, bought properties with a lower credit score.
Yeah.
However, the lower your credit score is, the higher interest you're going to be paying. So, so some of these things is something that, let's say, for example, if you're, like a credit score is like 620.
Yes.
And you're not like really in a rush to buy a property.
Yeah.
Once you speak with the lender and they tell you this is what you need to fix it to bring it to 680 and above,
Yeah.
probably it's going to take you a few months to do it. I would say just do that, right? Because it's going to save you money at the end of the day.
At the end of the
right?
day,
So
with
your
the interest rate.
Correct.
Good.
Yeah.
Hey, that's good. I mean, it's such important information because some people will not think about the interest rate and its correlationship with your credit score as you go into this. So basically, the higher your credit score,
Correct.
that helps you to get a lower interest rate.
It just gives you more options.
More options
You know what I'm saying?
Yeah.
It just gives you more
as
options.
to which loan programs you can access.
Yeah.
Awesome.
And again, there's some people who have a higher credit score we've helped. There's people who have lower credit scores,
Yes.
Sometimes people, our clients, they might say, I really don't have, to wait for all those months. If I could get a loan right now,
Yeah.
because I'm renting over here, the landlord is selling the property.
Yeah.
I need to get out of here. Sometimes people
You're in a
have-
rush.
Yeah. So it is what it is. It's life. We're just saying, ideally, if you're looking to buy, then 680 and above.
Yeah.
However, we know people have different situations.
Yes.
And it is what it is. All we do is we just, do what we can to make it happen.
You work with the person as they come.
Yeah, but
It's like Jesus when he said, "Come as you are,"
okay.
and we just sort you out
He's
from
teaching
there.
me some verses over here. All right, yeah, it's true.
And so once all that is figured out, I guess obviously you need to have someone like you in the picture, because
Yeah.
for you to have like answers to the questions,
Yeah,
my credit score, how do I run that, like what is open for me out there, you need someone to hold your hand, right?
correct,
So my question comes in, you're a realtor
correct.
and there's real estate agents.
Yeah.
Could you just give us a brief definition, or like what's the difference between the two, and what do you need as you're coming in to purchase a home for yourself and your family?
I don't really want to complicate this this information, because I believe one thing. I believe your audience,
Yep.
they, even if you do some of these definitions, it's gonna go over their head. I think people with this process, you really want to make it simple.
Yes.
Right. So, number one, a real estate person, you want somebody who's licensed.
Yes.
I would say somebody that has been doing this for a while.
Yep.
Right. And how do you find about that information? Let's say I give you a name.
Yes.
I say, all right, this is you're looking for a real estate agent. This is the name. If you really, really trust me, you most likely you're probably gonna go with my the person that I gave you the information.
Yeah.
But if you're just going online to look up people,
Yeah.
You just want to see, what are their reviews, if they have any reviews, how long have they been doing this?
Yep.
Some realtors, they do it part-time, some do it full-time. And then you can always, if it's somebody that you don't really know, you can just ask them, hey, do you have clients? I can give them a call and just
ask for their references.
for their reference.
Good.
At the end of the day, Kevin, really people work with people that they like and they trust.
And they trust.
So you gotta like and trust the person that you planning to work with.
Yeah.
Yeah.
The other question I'll ask you, even as we come to the conclusion of this part of understanding the home buying process,
Yeah.
is there like a time frame from the point you get your realtor to
Yeah.
the point where you sign your paperwork? Is it going to take me a month to get that done, or is there like a rough time frame, or is it dependent?
So when you sign the paper is when you find the property.
Like, yeah, to you finalizing the whole process.
Okay.
Yeah.
So finding a realtor, again, it all depends. You can speak to different people who have bought properties.
Yep.
And most people, they kind of know somebody who's bought a property.
Yeah.
Right. Or sold a property. So it's buying and selling.
Yes.
So a realtor, most of us, we do both. Somebody selling, somebody buying. Once you identify that person, now we're gonna go back to what you approve for, right?
Yes.
So the time frame, also depends. Let's say you tell me you want to buy a property in a certain location,
Yeah.
but the pre-approval that you have, it's not high enough
Yeah.
to buy properties in that location.
The location that you
So
want.
that's gonna take you a long time.
Okay.
You know what I mean?
Yeah.
But let's say now let's flip the coin. Let's say you have the pre-approval, and that pre-approval you want to buy a certain location. That pre-approval is good for that location. Now we go back again to what kind of buyer are you, right?
You are.
Are you
you prepared
Do you
or
already
not?
have the some people have we say the 3.5%.
Yeah.
Some people have 5%. Some people have 20% down. So that type of a buyer, when you're going to present their offer,
Yes.
these levels to it, right?
Yeah.
So sometimes the seller might take that person that has a bigger down payment. Sometimes it could be too much of a bidding, right?
Yes.
So really, to answer your question, there's no like time frame.
Yeah.
How soon you'll get, to sign for that property.
Yeah.
However, this is what I say, Kevin. You want to work with a team that you're doing your part, I'm doing my part,
Yes.
right? And we trying to, make sure we achieve your goal, which is to buy a property. So you gotta be very active. You can't be, oh, now I have a pre-approval. Now I'm sitting back.
Now
I'm
you're waiting for Sam to do all the work for you.
Our job is to help. However, if I see a property and I say, hey, you gotta be available to look at this property, and you
Yes.
say, oh man, unfortunately I can't be around, during this time. So that the process will take longer.
Yeah.
So
So
every
there's no definite like time frame. But then again, also for the listeners out there,
Yeah.
you're not going to acquire your property within a week.
Like I said, it depends.
With
right?
how prepared
Every
you are.
scenario is different. Sometimes, let's say somebody comes to me and say, I'm looking for this type of a property.
Yeah.
And because I've been in the business for a while, I have certain connections.
Yes.
I can make certain calls and say, all right, I have a client looking for this type of a property. What do you have?
Yeah.
And they can say, all right, I have this. I've done a lot of that with the new constructions, because those are properties that you don't even see them on the market sometimes. But with the connections that I have with builders, I'm able to get that. So really, yes, it really, really depends. Every scenario is different.
It's different.
I would say, like, I know that your question is like, what's your expectation?
Yes. Yeah,
So
because I'm trying to look at the mindset of someone who
Yeah.
might be coming in
Yeah.
and they're in a rush to get
Yeah.
a property.
Yeah.
Maybe because, as we had discussed before, maybe where you are renting,
Yeah.
the homeowner is trying to sell the property and you have to move within a certain time frame.
Yeah.
Like, will someone come in saying, I need a house in like a month? Is
Yeah.
it possible? It sounds like you're saying it's dependent on how prepared you are,
Yeah.
and also how the market is looking like
Yeah. It's a lot of factors in there.
that go
How-
into
But this is the
play.
tip that I can give, especially people who are renting and they're thinking of buying.
Yes.
I always tell them, number one, when do you want to be in your property that you're buying? And they'll tell me something like, let's say somebody says June,
Yes.
right? And I always tell them, you want to start this process of buying at least 5 months prior to
To the time you want to
June.
move.
Yeah. So if you have a lease and your lease is gonna expire in June,
Yeah.
you want to start this process at least 4.5 months earlier, because again, you don't know, how often the properties will come on the market, how
Yes.
quick you can get that property, and sometimes you can find a property within a week, but the seller might say, I need to find a property. I'm gonna
before I
sell
can
this
move.
one, but I need to find another property
Yes.
before I can move. So you see how there's different scenarios.
Yes.
Whereby you can find that property within a week, but the seller might tell you like, hey, I still need to buy a property.
So I need to stay here before a little bit longer before you
Yeah.
can come in.
So really, it's really a patience game.
Yeah.
To be honest with you.
And I think
Yeah.
also knowing to give yourself like a cushion of time
Yeah.
will be important. Do not do things last minute. Like your lease
Yeah.
is expiring next month.
Correct.
And now that's when you're rushing to get it done.
Correct. Correct.
So give yourself like a cushion of time.
Yeah.
There's a topic we had discussed prior to this,
Mm-hmm.
and I will just briefly just touch on it,
Yeah.
even though I know we cannot really go deep into it.
Yeah.
And this is just about the mortgage part and the financing part.
Okay.
And we have mentioned several times, like there's different loan options out there that someone can take advantage of.
Yeah.
And I know that we cannot dig into it because, as you mentioned, it's dependent on the loan lenders, right? But just briefly,
Yeah.
could you just explain so that the viewers are able to understand this? When you're applying for the mortgage,
Yeah.
the realtor is not the one who's giving you the mortgage. They have to go to a secondary person.
Yeah.
Just in a few words,
Yeah.
how does that process work?
Yeah.
And people may be questioning, like, okay, what are these options you're talking about? Is there a place I can read on or look up, like what are the options or anything like that?
Yeah. So when you come to a realtor, so the mortgage, right?
Yes.
You have options, right? You
Yeah.
can go to your bank, your regular bank.
Yeah.
And what they will ask for is, of course, they want to see, number one, when we say the income, one of the ways they look up your income is your W-2s, right? If you're employed. If you're self-employed, then you have to, give them,
Your
your profit,
1099.
your profit and loss and all that
Yeah.
stuff. So your W-2s, they're very important. Or, if you're in business, you just want to make sure that you got your ducks in,
In a row.
in a row. Yeah. So really, when you go there, so that's the one option. You
Yeah.
can go to the bank. The other option is, hey, somebody like me, I've been in business for a while.
Yeah.
People come to me, and even though they have their own bank,
Yes.
I have, again, lenders that I deal with.
Yes.
Correct. And this is people that I have experience,
People you've worked with.
people I've worked with.
Yeah.
They call, like mortgage brokers, sometimes mortgage brokers, so they have different types of loan programs
That they can
and
offer you.
for you, I cannot tell you all about these loan programs because it really, really depends with your file, right?
yeah.
When you walk in and they're looking at your credit,
Yes.
they're looking at your income, they're looking at your debt,
Yep.
then they have all these options that comes on their screen.
Yes.
So that's a mortgage person or the bank. However, again, you come to somebody who's been in the business for a while.
Yes.
I might sound a little bit biased, but it's because I know how these people work.
That's true.
right. I've worked with them.
Yeah.
We've processed the some loans. They're very complicated.
Mm-hmm.
That these people they've put these loans together.
Yeah.
I don't know if necessarily in the bank, if the bank that you go, that you have your account with, I don't know how they operate.
Yep.
So I just tell people you have two options. You can go to their bank, or if you want the person that we really, really work with and I have experience with,
They can help you out.
they can help you.
All right. I'll probably, because this is something I'm also curious. And
Yeah.
if there's someone out there who's like works in the bank or a loan lender or something, a mortgage broker, and you'd like to be part of the show, you can definitely reach out to me, and I would like to have you on here.
Yeah.
Just help us understand all these concepts just a little bit better, just so that we are all like knowing what's happening. I believe that information is power,
Yeah.
and the more we know, the better we are situated at making the right choices for ourselves.
Yeah.
Just to move right along, now all this has been done. You've been able to identify your realtor.
Yeah.
You have all your ducks in a row.
Yeah.
And you've been pre-approved
Yeah.
for your mortgage, and now you are ready to find your right home, the home that
Yeah.
your forever home or your home at that moment.
Yeah.
How do you know if this house that you're about to purchase,
Yeah.
is it a good investment? Like, how do you know? Like,
It's Kevin. That's a great question.
yeah,
I would tell you though, most of the times, all right, there's the part of whereby you as the buyer,
Yeah.
when you walk into that property,
yes,
you will feel if this is something that you want.
yes,
Right. And then there's the other part of it where as realtors, we come into the picture, right?
Yeah.
So you might see a property, be like, oh man, I like this so much.
Yep.
And then me coming in, I'll give you my professional advice, right?
Yes.
So sometimes you may be looking at something in that property. A lot of times people just see what's in there.
The
right?
surface, yep.
However, for me, when I go show a property or when I come to a property, I look at the exterior, the outside of the property, and also like kind of the surrounding of the
To
area
see what's going on
Right?
in the area,
Yeah.
in the neighborhood,
and
basically.
the neighborhood.
Yep.
So sometimes, I would tell the client, I know, you like this property.
Yes.
However, I want you to also see that these other things going on out here.
Yeah.
Right. Or maybe this property, I know you really like it. However, it seems like the type of work you need to put into this property, it might be a lot of work.
Yeah.
Are you okay with that?
Yes.
So we give them the professional advice. At the end of the day, if the client says, no, I still want to get this property,
Yes.
then that's okay, as long as
they
we
are
make
making-
sure we disclose to them what
Yes.
we see, right?
Yeah.
So to answer your question, really, number one, you when you walk into the property, you will probably have a better idea. Is this where? Because I mean, you're looking at the bedrooms, you're looking at the bathrooms, you're looking at the kitchen, and you're in your mind, you're telling yourself, all right, my family or myself that I'm buying this property, does it fit with what I'm looking for?
Yes.
Sometimes it could be the location, right? Sometimes let's say, for example, you walk up downtown Boston, you might not get the probably the best home,
Yes.
right? But
But it's
you might
convenient
say
for your
it's very
travel.
convenient to where I go to work.
Yes.
That's why I would want to buy this property. Yeah.
The reason I asked that is because even I myself,
Yeah.
I'm someone who likes to have acreage,
Okay.
and that obviously makes me biased
Yeah.
in my perception of looking at a property, because I'll be looking at the face value of it.
Yeah.
And clearly there's a lot more
Yeah.
that you have to look at, the neighborhood in itself and
Yeah.
all that. You had previously mentioned about a home inspection.
Yeah.
Are you doing the home inspection after you've identified the property, or when does this come in?
Yeah. So the process.
And what's the importance of doing it?
Yeah. So the home inspection usually happens once you identify the property.
Yeah.
You make an offer, and the way you make an offer, you sit down with your real estate agent.
Yes.
And then you have a strategy how to write this offer.
Yeah.
You write this offer, and then usually when you make an offer, a lot of times there's some money that you have to put up. You remember how it's called honest money deposit?
Yeah.
But that money is part of the down payment.
Yes.
So for example, when you're making the offer, you put like $1,000 or $2,000, right?
Yeah.
If your offer gets accepted, then of course, they keep the money, right? If your offer doesn't get accepted, it's not like you're gonna lose that money.
No.
You don't pay them.
Okay.
So let's say you put an offer, it got accepted, and that's when you do a home inspection. When you're writing their offer,
Yes.
there's some clients, they might say, I want to do a home inspection. And there's other clients, they might say, I don't want to do home inspection. It really depends with the experience. For me, I encourage people to do home inspection.
Yes.
However, there's certain buyers, they might say, maybe they have some experience, or
Yeah.
they have people in their family that are very handy and stuff, and they might
they can come in and
they
fix it.
can tell you, the buyer will tell you, I don't want to put the I don't want to do the home inspection. Of course, you have to advise them
Yes.
the importance why you need to do the home inspection.
Yeah.
The purpose of doing the home inspection is every home is gonna have issues, right?
Yeah.
You just try and find out, does this property has like major issues, or is it minor issues that I can deal with?
Yeah. You basically want to know what is hidden in the
Yeah.
drywall and all that kind of stuff.
I mean, all right. So just full disclosure, right? The home inspectors, they cannot see what's behind the wall. They can only see, like, we are here in a room. They can only see what's here,
Yeah.
right? So I mean, let's say, God forbid, like, down the road something comes, from at the back of the wall.
They're not going to know all
Yeah.
that. Okay.
However, most home inspectors, they're very professional. They know what they're doing.
Yes.
So just to answer your question, yes, there's the importance of doing a home inspection.
Yeah.
However, as real estate agents, you're the buyer. You just hired me to represent you and to help you. However, you as a buyer, if you tell me, Sam, I don't want to do a home inspection, if I don't want to put that home inspection contingency,
Yes.
because if I do that, I'm going to lose on this property, and I don't want to lose on
You
this
don't want to
property.
lose the property.
So it all comes to
How you-
every client is
different.
whatever they want. However, at the end of the day, yeah.
But it's
home
it's
inspection is
recommended to
something
do it.
that- yeah.
So also, as we are looking at the face value of the property as well,
Yeah.
You may be looking at an old house,
Yeah.
a new house,
Yeah.
new construction. Maybe the house is like 20, 30, 50 years old.
Yeah.
Is there any disadvantage of buying an older house in comparison to a new house?
So again, these are great questions that you're asking. It really, really, again, depends with the client,
Yes.
right? Some clients, they don't mind their old homes. They say, it has some warmth to it. Some people have lived there for many years, right?
Yeah, yeah.
And then there's other clients, they don't want, an old property.
Yes.
They want a newer property.
Yeah.
Basically, when it comes to home buying is, in the beginning, Kevin, right? When I started doing this,
Yeah.
I used to, I used to think like whatever I like,
Yeah.
the client should like. And then I came to understand that, people have their own taste. People see themselves in certain properties. So some people like old properties.
Yeah.
Some people like newer properties. Well, when you're buying that property, you just want to see the most important thing is like, let's say if it's an older property, it's when was the last time the roof was done? When was the last time they changed the boiler or the heating system?
Yes.
When was the last time they did the plumbing? Things that like those ones,
Stuff that can break. And I guess that was my actual question is,
Yeah.
should I be worried with the old home?
Yeah.
Like, is there like an issue with a leaking roof? Should I be worried like a burst pipe somewhere?
Home
corrosion?
inspection.
Yeah, home inspection comes in.
Yeah.
At that point, like, hey, it's important to do that, and more especially with an old home, because you do not really know what you're
Right.
dealing with.
Yeah. And this is the other thing. Once you do the home inspection, you do have a few options, right?
Yes.
If you choose, let's say, you found some stuff in the property. Again, depending how that property was listed, some sellers might say, I'm selling as is. Some people might just say, do your home inspection. If something comes up, we can negotiate and
Yes.
stuff like that.
Yep.
But as the buyer, if things come up and you're not comfortable moving forward with the deal,
Yes.
you can always be able to, come out of the deal.
Oh, so you're not locked in at,
You're not
at
locked
any
in.
one point.
However, again, when you have your agent, the way you present their offer,
Yes.
you gotta be make sure that you have that option.
Okay.
You know what I mean?
Yeah.
Sometimes other people might write an offer and you didn't cover all the bases.
Yes.
And somebody might say, oh, no, yeah, you got to move forward. However, most of the times, most sellers, they're very understanding.
Yeah.
Some things come up, sellers didn't even know about.
That's true. Yeah.
So they're saying, most sellers would say, you know what, yeah, if you're not comfortable moving forward, you can get out of the deal. And the money that you put, you remember how we say like $1,000 or $2,000?
Yes.
The honest money deposit, that money comes back to you.
So you do not lose that.
No. So the only money you lose at that point is, I'm not going to say you lose. I'm going to say the investment you made is for the home inspection.
Okay.
Yeah.
All right. I like that. And I guess the point is be involved as much as possible
Yeah.
in the process. Like if there's paperwork that's been written up, you want to know, hey, what's happening? What kind of a deal am I getting into?
Yeah.
I'm just going to go back to this before we move on to the next part about making the offer.
Right.
The surrounding, we talked about finding a good, knowing that the house is a valuable house.
Yeah.
Is the zip code important?
So, so that's
Should
like-
should I be worried with like the zip code I'm going to? Should I be checking
So Kevin, one of the things is, right?
Yeah.
Remember what you approved for?
Yes.
So depending on what you approved for, right?
Yeah.
Sometimes you could be very limited to where you can
To
buy
where
a
you can
product.
buy your
You know what I
property.
mean?
That's true.
So for you as the buyer, now all right, so I'm limited to, this
A
area
certain
right here.
area.
I would say,
But that also means that,
yeah.
certain zip codes will not allow you to purchase a home there because they are more expensive than other zip codes. I guess if you're not approved for a certain amount,
Yeah.
there's certain zip codes where it's gonna be hard to find a property.
Yeah, so let me give you an example.
Yes.
Let's say we go back to the 500,000.
Yeah.
Right. You approve for 500,000, and kind of I don't want to put certain terms in here.
Yeah.
But anyways, let's say you approve for 500,000. Right.
Yeah.
And you want this zip code over here.
Yes.
Right. And that zip code, the 500,000, it's gonna get you 40, 50, 60 old home.
Yes.
So, we come back to you and say, Kevin, okay, so you want this area?
Yeah.
This is the type of property you're going to
That you
get.
can get in that area.
So if you're looking for something that's, going to be, because probably at that zip code,
yes.
for the type of property that you really, really want,
Yeah.
maybe they're going for 650, 700,000. You know what I mean?
Yeah.
So you have to make a decision what you want to do.
Yes.
If you want to stay here, you'll find a property that's gonna be much, much older.
Yeah.
Old,
I
right?
guess what I'm taking from what you're saying is,
Yeah.
depending on the zip code,
Yeah.
houses would be valued at different amounts.
Correct.
Even though it's the same house in a different zip code,
Correct.
it will cost you
Yeah.
a whole different sum.
Yeah.
The other question I'll just put in there
Yeah.
in terms of the zip code is it more expensive to live closer to the city or far away from the city?
It's-
like what's the trend?
Yeah. It's usually more expensive when you're living closer to the city.
Mm-hmm.
Sometimes in certain towns you don't even get much.
Yeah.
However, we go back again to what you really, really want.
Yes.
Right. So for somebody who works in the city,
Yes.
they want to live closer to the city.
Yeah.
For somebody who works from home,
It
they
doesn't
can-
matter.
It
where
doesn't
they are.
matter. They can live. They can buy a house, whatever they want to buy. So it really comes down to what do you like. Some people don't. Some people might not like the city life. Some people want to feel like, all right, I work at the city, but at the end of the day, I want to go home. I want to feel like I'm in an area.
Yes.
For example, like you're talking about, you want somewhere like has a lot of acreage. Where
Exactly.
you want that peace of
Yeah.
mind. So for you, we gotta go.
Far away from the city.
far away from the city. Yeah. So it really comes down to the client,
Yes.
what they want, what they approve for, and what are they really looking for. So for us, for me, usually when I sit down with a client,
Yeah.
before we go out to look at properties, once
Yep.
they're approved, I usually sit down with them for about like 45 minutes.
Yes.
And we ask certain questions.
And
right?
it takes me back to your first question is
Yeah.
why are you buying the property?
Why are you buying? Why do you want this? Which areas do you want? Why do you want those areas?
Yes.
And then based on the response they give me, then I tell them, all right, so this is what the expectation will be.
Yep.
Based on your approval,
Yes.
this is what the expectations will be,
Good.
and then we go from there.
All right, as we are coming to a close, and we are going to end this.
We're just getting warmed up.
Yeah. We're going to end this section by going into the offer process.
Yeah.
And we are Kenyans, so
Yeah.
we negotiate.
Yeah.
And I know most people will be wondering, is it a fixed price? Do I have room to haggle? Can I go back and forth? Like, can I ask for?
Yeah.
So how do you make the offer?
So the way you make the offer is, again, you sit down with your real estate agent.
Yes.
Right? And the real estate agent, ideally, what the agent you need to do is you want to speak to the other party, the seller's listing agent,
Yes.
the agent representing the seller.
Yep.
Right? You wanna have an idea, what are they really looking for?
Yes.
Right?
Yeah.
Because sometimes people might think, if I can't make a higher offer,
Yes.
it's that's how I'm gonna get a property. But it's really, when you're buying real estate, it's really the price and the terms.
Yeah.
For example, this let's say a seller that's saying, all right, I want to sell my property, but I would like somebody who's gonna give me at least 3 months to be here to be able to find my property.
Okay.
So that strategy, it might not necessarily be the highest offer.
Yes.
It might be the buyer who's flexible to give them, time to live there and to give them time to move.
To move.
It could be other scenarios whereby, a property came on the market and you like it, other people like it, and the way you can, have your offer accepted
Yeah.
is you have to, offer higher.
Yes.
And again, that's a talk that usually you with the agent will have, because you're saying, all right, if I'm gonna offer this much, you kind of want to also have an idea. These kind of like comps,
Yes.
saying that all right, if I offer 20, 30,000 above, there's some type of comps.
Yeah.
Uh,
And what do you mean by comps?
comps is just other properties similar to that one.
Okay. Oh, comparable.
Yeah,
ones.
yeah,
Okay.
yeah. I'm sorry.
He's using the technical jargon.
Yeah.
But now,
And sometimes, Kevin,
Yes.
Sometimes you as a buyer too is sometimes how really, how bad you want that property.
Yes.
You know what I mean? Again, for some people, they could say, you know how you're talking about location and
Yes.
and you can say this is the ideal place, this is the ideal location.
this is it.
Yeah. So you have to, when you're offering that above that, asking, as a buyer, they see the value what they're
Yes.
getting back.
Of what you're getting from the property.
Yeah.
And so now you.
And sometimes you can go back and forth.
Yeah.
There's offers that you can present and you can go back and forth, with,
and
with
see
the,
what happens.
with the seller.
Yeah.
You just want to have have an idea what's going, not you, your agent, whoever
Okay.
is representing you,
Yes.
to have an idea what's really going on. And is it something like, we can go back and forth? I
Yeah.
mean, you can present your offer the way you want to do it. Or is it you as a buyer? Because there's some buyers, they tell me, Sam, I don't want to go back and forth. I don't have all day to go back and forth. This
Yeah.
is what I want.
Yeah.
This is, ask them how much they want for me to make an offer.
Okay.
And and you do it that way.
And now you found this home that you like.
Yeah.
You found this location that's ideal for you. Your family
Yeah.
falls in love with it. And you make this offer,
Right.
but your offer is rejected.
Yeah. Ooh. Yeah.
What is next, or what do you do? What happens if your offer is rejected, and what do you do after that?
Yeah. So part of this process, again, you want to work with somebody, the realtor,
Yes.
or the team, the realtor, the mortgage person. You want to work with people that, again, they've been doing this for a while,
Yes.
and they're able now to advise you, and find a way on how to talk to you. Because remember, for your offer to get accepted,
Yes.
or your offer getting rejected, sometimes it's not on you. It's
Okay.
just like maybe the other buyer maybe was a much stronger buyer than you are. If you're putting 3.5% down and the other buyer is putting 10% or 20%,
Yes.
if the other buyer say, I'm gonna waive the home inspection.
If they offer more.
So to answer your question, really you're just going back to the drawing board. Sometimes your offer gets accepted the first time. Sometimes we can go through, several properties, 2, 3, 4 properties. I think at the end of the day, it's when you're buying a property, it's a patience game,
Okay.
right?
Yes.
It's a patience game. And what I've, with my experience, yeah, the client feels very deflated the first time their offer gets rejected.
Yeah.
However, we end up getting a property that's really what they really
Way
wanted.
much better.
Yeah,
And this leads me to asking you this question.
yeah,
If all these scenarios are possible,
yeah,
then what makes me
yeah,
as a buyer
yeah.
competitive in the market? Like, what are the key points? Just highlight them. What are the key points that will make me a competitive buyer
Yeah,
in the market?
yeah. So you remember, beginning of the conversation, we said as an ideal buyer,
Yes.
you want to have your down payment and you want to have your closing costs. I know we didn't mention too much about closing cost money.
Yeah. We are going to come to that.
Okay.
Yeah.
So if you have your down payment and you have your closing cost,
Yes.
that helps.
Okay.
Now, that's an ideal buyer. Now, if another buyer comes in and they have 10%, 20%,
Yeah.
to put down, remember, again, that makes
It makes
that
a
buyer
difference.
a much, much stronger buyer. However, I do deals all the time.
Yeah.
I don't, not all my clients have 20% down.
Yes.
They have the 3.5% down.
Yeah.
it's really whoever you're working with. Again, I keep on going back to that.
Yes.
Even though I deal by, you want a down payment and closing costs. However, if these, remember, when you're buying a property, sometimes it's not. An offer could be accepted just because you are, me and you, we've done a deal together
Yes.
as real estate agents.
Yeah.
So you might not be sometimes the strongest buyer,
Yeah.
but because of the connection we have, right? Sometimes your offer can be accepted because who knows, maybe you're living down the street and and the owner, and the owner says, all right, I'm selling this property, I'm going to sell it to Kevin. He might not be giving me the the
But you
highest
already
offer.
have some kind of connection with them.
Yeah, so there's a lot of factors that goes in, for your offer to get accepted.
Yes.
The bottom line is, if you have your down payment and you have your closing costs,
You should be.
now that helps a lot. Unfortunately, we don't deal with clients all the time that they have
Who are
their
who are
down payment.
financially prepared. But if you're prepared financially, that
Yeah.
makes you
Yeah.
a much more competitive
Correct.
buyer in the market.
Yeah.
And talking about closing costs,
Yeah,
you already covered what it entails,
yeah.
who's being paid in these closing costs.
Yeah.
Is there like a rough estimate as to how much we are spending here? Or is it also like dependent on like the type of property and however much like your representatives are charging you?
Yeah, so usually I tell people, let's say you're buying a property for 500,000.
Yes.
I would say ideally, if you have 10 to 11,000, that should help you, pay for the closing cost.
And that's on top of however
The down
much you
payment,
have for the down payment. Okay.
yeah, because those are two different things.
Yes.
Down payment, you're really just telling the bank, man, I got, the bank is saying, you got some skin in the game? Yes, I got some skin in the game.
Yeah.
That's what I'm doing. The closing cost is the fee you're paying for doing the business.
Yes.
So again, that goes to whoever's going to be doing your mortgage. Again, I need an attorney. You need to do an appraisal.
Yeah.
The bank usually orders the appraisal because sometimes, people might say, man, I'm making an offer for this property. I don't even know if it's worth that much. I always tell them, hey, listen, at least you have, the bank will send an appraiser.
Yeah. So
come
I'm
appra-
talking about an appraisal. I've had a story of someone who went to buy a house.
Yeah.
Had an appraiser come in
Yeah.
and they appraised the house for way much more
Yeah.
than what they had initially thought the house would be costing.
Yeah.
So that being said, what is a home appraisal
Yeah.
and why is it needed? And if the scenario like what I described happens, then what do you do?
So hold on. So you're saying this person was buying a house
Yes.
and then an appraisal was done.
So
the bank usually orders the appraisal,
yes. So
home appraisal.
before the appraisal was done,
Yeah.
they already had an idea of how much the house would cost.
So
But after the appraisal came, I don't know, there's an appraiser or
that's fine.
after they came in,
Yeah.
the house was worth much more
Okay.
than initially estimated.
Okay. So all right. I think I understand what you're asking.
Yeah.
So let me give you a scenario. You're buying this house for 500,000.
Yes.
Buyer and seller, you've agreed at 500,000.
Yeah.
Then what usually is done, because you're getting a loan from the bank usually orders an appraisal, a home appraisal, because remember, the bank is giving you majority of the money.
Yes.
You know what
Most
I mean?
of it.
Yeah. So they have to make sure that the property that we're about to give have the loan
Yeah.
is something that we want
It's
to
a
see
worth.
what is it appraised for.
Yeah.
So if it's 500,000 buy and seller, you've agreed buy and seller 500,000. If an appraiser comes and says the property is 502, 510, 530,
Yeah.
that's okay. Nothing usually changes.
Okay.
That means you have whatever higher it will be, if it's 10,000, 20,000, you have that much equity already in the property.
So that means that the seller cannot change their mind and say, hey, I want the extra money.
No,
Okay.
that could not happen.
Sounds good.
Now, if the appraisal comes lower
Yes.
than the 500,000, remember buy and seller, you agreed 500,000.
Yeah.
And then it comes, let's say 490.
Yes.
Then usually, again, we go back to the seller. Hey, Mr. or Mrs. Seller, the appraisal came down 90,000. could you adjust the price to that? And sometimes they can. Sometimes they might say, how about if the buyer meet me halfway, blah blah blah.
Yeah.
The
So you find a way to negotiate.
yeah.
Okay.
However, if the buyer does not have the funds to cover, let's say the seller says, I'm not gonna, and the buyer does not have the funds to cover, unfortunately, that deal usually,
It falls through.
yeah,
Okay.
it falls apart. But there's we try to figure out like different ways of how to put the deal together. But if we can't, we can't. But I think based
You
on
try to make it
based on my
happen.
experience, I don't remember like a deal that did not move
Did not
forward.
go through
Yeah,
after
even
that.
though the appraisal came low in some of my deals, but we try to find ways on how
Okay.
to make it happen.
And I'm going to dive into some technical terms here.
Yeah,
Title deed,
yeah,
a title and a deed. I'm thinking those are two different things.
yeah.
What's a title?
So the title is really the property. Say it's 125 Main Street, and it's owned by Kevin.
Yes.
Right. That's the title. That's what it says. When I go to the public records, I see that's what it says. Who owns the property? That's the title.
Yeah.
The deed is usually now the physical paper that when you're signing, when you're selling the property to me, we
Yes.
have to sign a paper, the deed. So that deed is the one that's really a physical paper saying that
They
ownership.
transfer the house to you.
Yeah.
Okay.
Yeah. So the title, just think of a title like your name, Kevin, and owns 123 Main Street.
Okay.
But the deed is the paper that now
shows
the
the
new buyer
transfer.
can hold and say, hey, now on of transfer.
And if you're taking the house on a mortgage, do you get to keep the title or does the bank?
No, you have the
keep-
deed. Yeah,
You have the deed and not the
Ba-
title.
basically, you have those two things. Again, the title is when somebody's looking up the property.
Okay.
The deed is and sometimes the deed can have other maybe people included there, but
Yeah.
but the deed, think about the deed is the physical paper that the transfer of ownership.
Alrighty. Another
The title is not like a physical paper. It's
It's
kinda
just like showing who's
Yeah.
the owner.
Yeah.
Another technical term is PMI.
yeah,
What's PMI?
private mortgage insurance.
Okay.
So usually when you're getting a loan, if you're putting less than 20%,
Yes.
your loan is going to have PMI, that private mortgage insurance.
Yes.
So basically what it is the bank, they want to make sure that loan is insured in case, you're going through foreclosure or you're not paying and they have to take back their house.
Yeah.
It's an insurance policy to make sure they'll get their full amount back.
So basically, the bank does not lose money.
Yeah.
You pay insurance.
Oh, the bank is not here to lose money. Trust me. Now, if you
Okay.
put 20% down,
Yeah.
then you don't have that private mortgage insurance because remember, let's say it's a 500,000 house.
Yeah.
20% is what, like 100,000.
100,000.
So I mean, you're already showing the bank like you got more skin in the game.
Yes.
So.
So they're not worried about you paying for it.
Yeah. However, that PMI, depending with the loan that you get, because every loan is different.
Yes.
Once you gain 20% in equity, let's say you bought the house 100,000.
Yeah.
Once it shows that you either paid the 20%, 20 grand,
Yeah.
or maybe it's appraised, more than 20%. At some point, that will come off.
Okay. So it's not a permanent situation.
For certain loans,
Okay, it's
permanent.
dependent. Okay.
And some people might say, oh man, I don't want to feel like I'm locked up with this loan with the PMI for all these years. But maybe at some point, if you refinance and you get a different loan,
Yeah.
then you may not have.
Then you may not have it.
Yeah, but remember, it's really like you put like 20%.
You have to have like 20%
for the
down.
most part. Yeah,
All right. Another thing is the homeowner's insurance cover.
yeah.
Completely different from the PMI. So what's
Yeah.
the homeowner's insurance cover?
So, full disclosure, I'm not an insurance person, so I cannot tell you to the basics. But I like to put things very, very simple.
Yes.
Right. So the PMI, so we already said, is something that
That covers the bank.
The bank, you know, is having this insurance policy so that if you know if you go through foreclosure, or let's say you know you're not making any payments, and
Yes.
the bank has to take it back and something like so, their loan is covered.
Yeah.
But the homeowners insurance, think about it like your car insurance.
Yes.
Right. So you know you're saying you know my car insurance, you know this is what it covers. You were getting into an accident, you know stuff like that.
Yep.
So a homeowners insurance, it's basically that like if something happens, let's say like a tree falls into your house, you know somebody came to your property, you know they injured themselves, you know people you know.
So it's basically just like insurance. Yeah.
Yeah. So just to make it very very simple.
Yes.
Think about like when you have car insurance.
Yeah. It's the same as the homeowners
Yeah, so
insurance,
home
but for
insurance-
your house now.
For your house, yeah.
Okay.
Yeah. And then of course you know somebody from an insurance company, they can tell you every little bit that's covered into that policy.
Yes.
Yeah.
Is there a way for you to lower your now after you've bought the property?
Yeah.
You've moved in.
Yeah.
You're enjoying your life there with your family.
Yeah.
Is there a way for you to lower your mortgage, like your mortgage payments that you make? Is there a way to like reduce that?
So there's a few ways, right?
Yeah.
So number one, if you bought your property and let's say the interest was, you know, whatever it was, let's say if it was 7% or 6%.
Yes.
And then after a year, 2 years, you know, wow, the interest came down to, you know, maybe 5%.
Mm-hmm.
And how would you know that? Because a lot of times, again, people, you know, buy houses and they go about their business, right?
yes.
So even if the interest comes down, they're not into that. And that's why I keep on going back and saying, you know, when you have a good team, especially a mortgage person,
Yes.
I know like, you know, the guy that I give him most of my business,
Yeah.
he usually keeps, you know, he knows like, all right, you bought it at this percentage, and then they keep on monitoring that because again, it's more business for them because when the interest comes down,
Yeah.
you can refinance and your your mortgage can come lower.
You can pay less.
Yeah. Or or you can so when it comes to refinancing, Kevin, you still it's kind of you know how we said about the closing cost.
Yes.
So you're still gonna have closing cost.
Okay.
However, there's ways sometimes you can say my property already built this much equity.
Yep.
You can just say hey, just get it from that. You know what I'm
Okay.
saying?
Yeah.
So that's number one. You can refinance. The other way is let's say you end up like making or you get a gift. Somebody gives you some money.
Yeah.
Right, 50, 60, 70, 800,000. You can call whoever you have the loan with, and you can tell them you want to put this into the loan.
Yeah.
So they can do what they call re-amortization, and then they can say, "Oh, now that you put this much in, probably your payments will change to X amount of dollars."
Okay, and that's you putting money into the principal.
Yeah.
Okay.
Yeah. So that's those are the basically I'm thinking
The ways to reduce the interest rate. Now
your payment, the way you
your
pay-
mortgage payments
payment,
rather.
Now
Sorry.
the other thing, Kevin, I think it's important for people to know is you could buy a property,
Yes.
and this could be your mortgage payment, and then after probably a year or 6 months or something, you say, "Man, why did my mortgage payment go up?"
Yeah.
It's not really your mortgage payment that went up, is the place that you're living, the city or the town. If the taxes went up a little bit, that's gonna be
It's going to increase how much you're paying.
yeah. But if you have a fixed mortgage for however 30 years,
And
that's not gonna change.
Yes.
It's just when you see that slight change, it could be either your taxes went a little bit high, it's sometimes a little bit, or it could be the homeowner's insurance probably went a little bit. So that's when people see.
Yeah.
Yeah.
And that was going to be my next question is you have the fixed interest rate
Yeah.
and the flexible one.
The adjustable one.
The
yeah.
adjustable
Yeah.
interest rate.
Yeah.
The fixed one
Yeah.
will stay the same.
Correct.
It does not change.
Correct.
But the adjustable one changes. What triggers the change, and does that affect how much you pay monthly
Yeah.
on your mortgage?
So the adjustable is usually so there's 5 years, there's 7 years.
Yes.
Right. So for those 5 years, you pay. It's kind of fixed for 5 years.
Yeah.
Right. However, if you don't refinance I wouldn't say with the 5 years. I would say once you get to year 4,
Yeah.
that's when at least you start the process to refinance it. But if you don't refinance and the interest rate went up, let's say you bought a property, 6%, and the interest goes up after 5 years and it's not refinanced, at that time, you'll see a difference in your mortgage.
Your mortgage will
So
increase.
usually the advice is, and sometimes this adjustable, it doesn't work for everybody.
Yeah.
You gotta be like on top of your game.
Okay.
Because listen, again, most people, they buy their house, life continues, they go about their business.
Yeah.
You know what I mean? They don't, so they're like, all right, this is my mortgage payment.
And they'll just put it on auto pay.
Yeah, but if you get in the adjustable, you just make sure like put someone on a calendar.
Yeah.
To know like, all right, 5 years is depending if it's 5 years or 7 years. Just put someone on the calendar like, all right, I need to do this.
But then again,
during that process,
yeah.
if you want, let's say you got it for 5 years or 7 years, during that time, if you wanna refinance and have like a fixed one,
yeah.
you can
And if the interest rates go down,
yeah.
that affects you in a positive way, where your mortgage is gonna go lower, or does it stay the same?
You know what? Honestly, that's a great question. I don't know about that, and I don't want to give a response to that.
Okay.
Because I'm not sure about that.
What happens?
Yeah,
All
what
we'll
happens?
We'll dig much into this, and we'll have answers.
But I tell you, the bank is not here to lose some money. The
No,
bank here
they're here to make money.
to make money.
All right. The last question that I will ask you is:
Yeah.
now you've moved into the house. How do you increase the value of your property
Yeah.
so that by the time you either sell it or pass it over to your kids, that it's worth more
Yeah.
than at the point when you were purchasing it?
So depending with the condition of the property.
Yeah.
Let's say you bought a property. They say, all right, maybe the roof is about 20 years. 20 above 20 years.
Yeah.
You just put a new roof, you're helping to increase the value, right? If the heating system, let's say it was an older heating system,
Yes.
and you put another one, that helps to increase the value. So any type of maintenance when you bought the property, you say, all right, I can see if I do this and this
Yeah.
could help. However, you have to be also very careful because sometimes people, let's say they want to put a new kitchen, right?
Yes.
And the kitchen they want to put is like a Taj Mahal type of kitchen, but in that area, that location, regardless if you put an 80,000 kitchen, maybe you may not get the money back.
Okay.
Because of that particular area.
Because of
where-
this area, like the zip code you're at.
Yeah,
So
yeah.
zip codes do have some kind of determining factor.
Every area has that. You just want to say, all right, if I'm doing this, and sometimes you can have like a realtor
Yes.
also to help you with that. They can say if you put if you do this and this. So I'm thinking the kitchen, the bathrooms,
Yep.
those help. Sometimes you change the flooring to hardwood flooring. That helps to increase the value.
Yes.
But the most important thing, really, Kevin, is I tell people you want to first protect your investment.
Yes.
You know what I mean? So I tell people that you know how people say about like life insurance and something. I say at least you want to, if you don't have that type of a policy, you if you don't have a like a life insurance, and you can speak to those guys that they do that.
Yes.
If let's say the house is 500,000,
Yeah.
at least I want to take a policy for over 500,000.
Okay.
God forbid something happens to you,
Then
and
the
your
house
family
is
is not
paid.
your family is not gonna get kicked out.
That's true.
And then also you want to also see with an attorney the best way to protect your at least you want to have like a homestead. That's something that for your single family or your primary residence.
Yeah.
It protects it up to a certain amount of money.
Oh,
So
good.
if somebody, let's say you got into an accident,
Yeah.
and somebody's trying to sue you, the first thing the lawyer's gonna look for is what's your asset. Do you have
Do you
a
have
house?
any assets?
Yeah. Do you have
okay.
a house?
Anything they can come for.
Yeah. Yeah.
All right.
Let me say something real quick. When we're talking about the down payment and stuff like that.
Yeah.
So some people might say, man, some people that I've helped, they're able to use, let's say if they have like like their 401k.
Yes.
Again, you just have to speak to your, CPA or whatever to see. But I've helped people who've been able to tap into that, because you're just moving money from one investment to the other.
another.
So some people have like those, 401k that will be, they've used that as to
To get a down
buy
payment for
property.
the house. Okay.
Yeah,
That is good to know, because
yeah. Some people, you can get a gift. Let's say somebody very close to you. Ideally, they want to say like a parent or a brother or a sister or whatever. They can give you like a gift
Yes.
that you can say, okay, I don't have the money in my account, but my sibling or my parents, or they're giving me 50,000 or something like that.
Yes.
Right.
Yeah.
And then for those folks that let's say they have, let's say, properties outside United States. Let me, in our case in Kenya,
Yeah.
right? And they're saying, what's the, I can sell that property and then get the money to
And
invest
use it.
here.
Yeah.
So we tell them, the advice is usually, if you choose to do that, you want, you sell it, but you want the money to come here and sit in your account for at least 2 to 3 months
Okay.
before you go to the bank and tell them, I want to. Because one thing the banks usually do, they want to see, okay, where's this money coming from?
Where is the money
If you
coming
came and
from?
put the money, but that's a discussion or a talk for another time.
Yeah.
With the lender and stuff like that.
Yeah.
and
I
if-
know
if you
that
need- if you
our
need
viewers
anything,
can tell you're a man who's a wealth of information. And once again,
Yeah.
just to thank you for being here with me today.
Yes, sir.
And together with our viewers, because this is such educational stuff.
Yeah.
That it's so important for people to know, because there's so many people who are wondering, how do I get started?
Yeah.
Right.
Yeah.
And we are going to be linking Sam's information
Yeah.
in the video and also in the comment section. So if you have any more questions that you feel, hey, I need to understand what Sam said, I have a couple more questions for him, you can go ahead, post your questions in the comment section. We'll make sure that he gets to hear your questions,
Yeah.
but also reach out to him on the information provided. His Instagram is going to be attached there, so that you're able to get a one-to-one for more information with him. We are going to be back with the part 2 of whatever we are discussing here in terms of how to get yourself from dreaming about your dream house to holding the keys to your actual house in the next episode, where we're also going to hear a little bit more about Sam and what drives him. And so tune in. Thank you so much for being with us. And once again, if you have any questions, if this episode definitely helped you, go ahead, post in the comment section. Sam, thank you so much for being with me.
Thank you.
Thank you. I appreciate it. Do you have a final word for our viewers?
Well, my thing is, sometimes when people thinking about buying a house, sometimes some people think like, oh man, I gotta be very, very old to buy a house.
Yep.
I've helped younger folks 21, 22 to buy a property. I would say, again, really, it's just talking to somebody like me who can give you kind of like a roadmap
Yes.
on how to get there.
Yep.
Because I think a lot of times we don't want to ask questions. However, when you ask the question, you might be like, wow, I can't believe,
Yeah.
So always, speak to a professional. You can always reach out to me. They'll put my stuff there, but I'm on Facebook, Instagram, LinkedIn, and I have a website. They'll put all the stuff in there, and looking forward to help a lot of you guys.
Exactly.
Whether you work with me or somebody else, we are here to provide you the right information.
Awesome. Thank you so much, Sam. Once again, we are here to provide you with information to help you navigate into this system that we found ourselves in, so that we may be able to not just excel, on the simple stuff, but also to build investments for ourselves, settle in and leave wealth, as it says in the book of Proverbs, for our children. And buying a home is exactly what that is, being able to leave an investment, wealth, up to the 4th generation. So thank you so much for tuning in. Make sure you subscribe to the channel, like the video, make sure you comment with any questions, and I'll see you on the next session. Thank you very much.
Thank you.